Yep, I'm going live right now.
That's perfect. There we go. You guys can see Meat and Beans, and you can see me today. And we're going to go over in a lot of detail about different things today, about stocks and whatnot. So thanks for joining me again, Meat and Beans. I'm starting to love the nice routine we got going on. What are we going to
Absolutely.
start today?
I have questions for you. Lots of questions.
Let's go.
Um, and some of them are going to seem like they don't have anything to do with stocks, and that's
That's fine.
somewhat true, but it's more of it'll come back to stocks. So my main question in it
Mm.
were when you were growing up, um, what kind of financial education did you get from your parents or any of your any idols or people you were looking up to as you were growing up? Did anybody teach you about credit and stocks and return on investments and making your money work for you and not the other way around or any of that stuff? Or was it something that happened throughout your life growing up that got you to start thinking about that? Like, how'd it happen?
Yeah. So growing up dirt poor, I tell Leah all the time whenever we go by mobile homes, I'm like, I lived in that. That was how I lived. And you don't realize this until you actually take a wall off a mobile home. You're gonna see that there's nothing there. It's just tin. And I grew up
Yep.
that way. And we were extremely poor. I didn't have the latest and greatest. I had what I need and I had food. I honestly can say I had that much. But financially, I was taught to stay away from credit cards because they were dangerous. And that was a lie. They were dangerous for people who didn't know how to manage their money, which is what most of my family was like. They did not know how to manage their money and they did not know how to save. So, what they would do is use that credit card and buy things that they did not need, and it would hurt them. But as a kid, I didn't get it. Like, I heard we had to sell our home in Georgia because of bankruptcy. We had to do this and that, and none of it made sense. Even when I was growing up, I'm like, I don't get why we were so poor. And even when I saw other family members, I got a quick education, hey, outdoor, when I was probably like 19 at the time about buying used cars. Like that's when we were talking about that. And then I got taught about how buying stocks, you can buy them and just hold. And it didn't make sense to me because at the time it was '08 or '09, '08. And if you remember during that time, it was
The recession.
extreme. Yes. And everybody was just losing money left and right. And I'm like, I don't want to get into this. And honestly, it wasn't until, so that's 19. So I go from 18, 19 learning about it and I just stop. I'm like, nah, this isn't something I want to get into. Cause I remember the main reason I remember that, guys, Amazon was $50, which we'll come back to that. Um,
Mhm.
yeah, we had that talk. Yeah, Amazon was $50 at the time, and I almost bought one or two, but I was like, I needed that money. So financially, I wasn't ready to start investing because I needed that money that I was investing because that's how I was spending my money, if that makes sense. So I could have invested, but I wasn't in that mindset yet that I could do it. I was taking that money that I had and I was buying things I really didn't need, like a new t-shirt, a new game, a new console, or a new computer, a new desk. Like I still have a computer desk from college that I never really used. Like there was no reason for me to really buy it. It's when I turned 26, 27, I was on tour and I've been saving up my money. I had no rent because I was constantly on tour, which I know a lot of you will never get that opportunity or have that. But I had that opportunity and I took advantage of it. And I started saving my money, saving it and saving it. And my friend's like, what are you going to do for retirement? I'm like, I mean, hopefully I'll have all this money saved up and I'll just, use Social Security. He was like, have you thought about a Roth IRA? And he started explaining it and started explaining like the compound interest, all of that stuff. And it started to really cross my mind. I am not financially prepared for when I get older. And I saw this happen with my grandparents. They had nothing to their name when they retired. Social Security just barely paid the bills, thank God. And they were just struggling. And I was like, I don't want to go back to that. That's been my mindset since then. I don't want to go back to, at the end of the day, I only have a couple dollars left and all my bills are paid. And this happens all the time with Leah and I. And we will literally talk about how she'll be ready to pay bills. And she's just like, Leah's just like, biting her nails. And I'm over here like, do you ever hear me complain about bills? you ever hear me like get nervous, I don't look at them. I know what my bills are. I have a little budget spreadsheet, and then that's it. Like I just make sure I know those are paid for. I try to get the best and lowest I can get. I try to negotiate and haggle and all that. But that's kind of how it started. Like I got so worried about what's going to happen to me when I get older based on what I saw my grandparents went through. And it took one guy, and it was a funny story. The guy's name was Eric. He told his friend, which is my friend Sam. And then since then, like when I go to write this story, I'll have to be like, if Eric never says anything to Sam, I never start investing. I never do it. So that's kind of how long a roundabout how we got to that point, how I got to where I'm investing. I have a Roth IRA and I have a brokerage. So
Yeah, that's very interesting. So my story is a little bit different. Um, I never got any education about credit. No idea what it was, or even
yeah,
taxes. Nothing, absolutely nothing about investing. I want to say I didn't even know what investing meant or was until
yeah,
I was in my mid to late 20s, and I'm 32 now. I didn't know what it meant to buy a stock or what even a stock was. I knew about the stock market
hmm,
and it the what Wall Street in New York. I knew about that from random things on the news or the
yeah,
movie that came out and stuff like that. I had no clue what it was though. Now my family was a little different, so um, I wouldn't say I grew up poor, and that's probably because my definition of poor is different than other people. Now, did I grow up with everything I ever wanted and money to just spend whenever? No.
yeah,
My dad got my dad basically found out he was my mom was pregnant with me
mm,
and was in school, was in college for forget what is it the exact degree he had, but basically to become a a building inspector.
okay, yeah,
And for people that don't know, there's a lot of different aspects to being a building inspector. It's not just like one thing. Oh, I'm a building inspector, so I can inspect every building, everything in a building, and all that stuff.
yeah,
You're a building inspector, and you gotta get certifications for electrical, plumbing, structural, all
yo,
sorts of crazy different things. So his schooling was quite vast and ongoing. So every couple of years or something like that, he has to get recertified because things
yo,
change and so on. So he's just busting his butt, and he gets this job, um, and starts making decent money. But I do remember there were quite a few times, and I don't know exactly why. I've never really asked my parents about this, but there were quite a few times where, um, we were living with my grandparents, for example, or we were in one city versus another, or something like that. So there were times where it was probably a little rough, but I never felt it as a kid. Um, I always had what I needed. I always had clothes. I always had food, and I even had some toys and stuff like
yeah,
that. But there is a difference though, because now that I'm looking back on it as an adult, my grandpa,
mm,
um, he, from what I was told, always had at least two jobs, and at times three and four jobs. He was a meteorologist with the Air Force. I know he's done tech stuff. He's done construction stuff. He's done so many different things. When he passed away, when I was about, I want to say 12 or 13, somewhere around that age, he had a couple $1 million to his name. So he also, I'm sure, did some investing too. Like he was really smart with his money. Um, he was a little conservative when it came to buying things, but not too conservative. I mean, he had a 53-foot Hans Christian sailboat that was like beautiful. And before he passed away, like a couple years before, he sold that, and that's where part of that couple million came from that
one
he
thing
had.
I want to point out
Yeah.
that he was smart with his money. I'm going to tell you this right now, guys. You're correct, he was, but it's not the smart you're thinking of. Like you don't have to be the super intelligent person to be smart with your money. I just want to point that out there as we continue down the chat. But that's kind of crazy. He was
Yeah,
focused. He had goals, man. He was like,
that's what I meant by he was smart with his money. He
yeah,
had goals on what he wanted to do, and he did them when he could do them. So he, from what I understand, never overtaxed himself.
yep,
So, and that's something I've been trying to live by in my life is, um, sure, I might get paid, for example, Friday, and let's say my paycheck is $2,000 and I have no bills with this paycheck. The smart thing to do would be like, oh, but I do have bills this month. Now, if I spend that $2,000, so I go buy a car or something like that, and I spend all of that $2,000, and I'm now back to zero. None of my bills are due until my next paycheck. But what is the amount of my bills to that paycheck? So my next paycheck comes around, and oh, I have nothing but bills. I got to pay all my bills. I might have a couple $100 left over, and that's it. Now that's a living paycheck to paycheck to paycheck. Now let's say I really wanted that car. I needed that car. This is something that a lot of people are probably gonna um, disagree on, but it's something that um, I feel like the disagreement has a lot to do with fear, laziness, that kind of stuff. But
yep,
let's say I needed a car to get to work, and my first paycheck comes in, it's $2,000. I'm not gonna spend that $2,000. I'm gonna spend the absolute bare minimum to get by, and I'm gonna put the rest of it probably just in a generic savings account, knowing that I'm gonna spend it in another month or something like that on something I need. But then I get my another paycheck and I get another paycheck. I always try to have that padding. So let's say, keeping on that line, I have bills one paycheck, no bills the other paycheck.
yeah,
If I have that padding, I spend a little bit of that padding on the bills paycheck so I can get food, gas, go out, do
mm,
some things, whatever I want to do, try to have a life. And then the next paycheck comes in and there's no bills on that. And it starts adding up and it starts adding up. And then let's say I have four or $5,000 in the bank, I go buy that $2,000 car. I still have a padding.
yeah,
So that's kind of what I feel like my grandpa did. He if he wanted something or needed something, he forced himself to wait until he had that extra padding. And there the reason I'm saying this is there was not a single time that I've ever heard of or seen myself where my grandpa did not have money for an emergency or something came up that he really wanted to do. He always had the money and he always had padding.
yeah.
The difference in my family life was my dad was the opposite. My dad would get paid and it would almost be immediately
Gone.
gone the next day.
Yep,
And there were times where an emergency came up, we had to move, or medical something happened, or a vehicle broke down, and we were extremely hard up because of it for a
yep,
month or two. And then we were back to normal. That's the kind of life where I'm trying to avoid. And me personally, I'm struggling with it time and time, but I feel like that a lot that helped my grandpa get that way was part of being smart with the money is he invested the money too. I know he owned stocks. I know he did. And I know he invested privately in companies.
that's
People like he
always,
would search out
yeah,
in companies starting out and he would invest in them. And I don't think any of them really like made him, you know, millions, but I think quite a few of them made him um probably over $100,000 on top of what he already invested. So that's a damn good investment when you get that type. So I just thought that was really interesting because I feel like a lot of people's current financial situations in their life has to do with how they grew up,
does.
what they went through, what they experienced, what they were taught. Um, so so my next question for you, um, now that Eric talked to Sam, you got the idea. How did you learn about it? How did you know where to go, what to do? Not who to invest in. We're not really going to get on
Yeah,
that level, because that's getting on that financial advice kind of
yeah,
thing. But
yeah,
like, if somebody came to me and said, "Hey, you need to start investing," and I knew nothing about it, I would be like, "Okay, but why? How? Where? What do I do?
yeah.
How'd you
That's a
find
good
all that out?"
So, honestly, I started reading about Warren Buffett a little bit because he's been the guy who's been doing it for a long, long time, right? He's a big guy into the S&P 500, which we'll get into that to a second
Yep.
because this is the simplest way I can do this for you guys, where you'll be like, okay, this dude just made all the sense in the world. So I'm going to start with you right now, okay? Um, so what do you have in your room right now that you can tell that is branded, that you know the brand? You know what I mean? Like,
Um,
what kind of computer are you using? Is it Windows?
basic, yeah, basically everything besides um, like the furniture. I mean, if
Yeah.
you knew the furniture type, you would know that half of it's from IKEA and the other half is, well,
Well,
homemade.
well, watch this.
That
So
desk
like
behind me,
so
that's a
yeah.
door. I made that.
Oh, that's nice. So, but for example, you have to use Windows, right?
Yes.
Microsoft
I
makes
don't have
that.
to, but I
Well, I
do.
get that. Yeah, yeah. But that's where this is where I'm going to go with this, and you're going to see. For example, so that's one little simple thing. Your webcam that I see back there, or your webcams, who made those? You know, that's another
Logitech.
company. Yeah, that's another company that is
And it
publicly
says
traded.
Logitech right on top of it.
Yes, and here's another one. Like, so you're walking around, your appliances, who makes them? Samsung, LG, Whirlpool. These are you start looking at things you use all the time. For example, what phone do you use? It's an iPhone, right?
Yep.
Yeah, that's another company you can invest in that people have made tons of money on. That's what happened. I read Warren Buffett, and then I read Shaquille O'Neal. He's like, buy what you believe in. That made a lot of sense to me. I'm like, okay, so I'm always using Xbox, right? Who makes Xbox? Microsoft
Microsoft.
again. Yep. I'm always using like my appliances for food. I need my dishes clean, my food cooked. Good morning. I need my food to stay frozen. I need all that. I need to use the microwave. Who makes that? That's the thing. You start looking at who makes the stuff that you're using all the time. You start looking to see their investments and see how well they're doing. And this year has been different. The last 2 years in terms of investing, where you kind of could blindly pick somebody and do really well. But the reason I say that is if you would have picked these companies you believe in, you would have seen a return really easily. So let's just go back 5 years ago. It's my favorite one to do because I do it all the time with Leah, and she rolled her eyes. If you'd have just invested 5,000 into Microsoft 5 years ago, because I wouldn't have seen Microsoft going anywhere except for up because I see it still using Windows, I see it still using their programs and all that stuff, and they have all the other side stuff. But 5 years ago, $5,000 turns into 25, and that was last year when I did it in June. I haven't redone it now to see how much higher they would be. But like you start looking at what do you drive, you know?
Chevy.
Okay, I know they have a stock.
So
Yeah,
so I absolutely get where you're going with that.
yeah.
And I would make some adjustments. For example, I probably wouldn't invest in Chevy. I would invest more into companies that I believe in that I don't own. Like I would invest in Subaru. I would invest
Mm-hmm.
in Tesla. If I got word that Chevy's gonna, hop off their BS and start, being a big part of the auto industry in development wise, then yeah,
Mm-hmm.
I might invest in Chevy. But Chevy, Ford, Toyota, Honda, all those companies, they've kind of just been there. They're just kind of making their new models every year. They're not doing anything innovative. Now,
True.
we did talk about like the electric car thing. If they started hopping hard on electric vehicles and like
Mm-hmm.
innovating with them, not just making what's already there, but like innovation, then yeah, I would probably invest in them because stuff like that I feel like would make the company more valuable if they're successful. It's obviously it sounds like a gamble. Like if they're not successful, I might lose money, but
Exactly. Well, the other thing
they're
is, go ahead.
I was just gonna say they're really huge companies, so I really find it hard to believe that they wouldn't be successful.
I get that. So, when it comes to that, that's a totally other industry, but I kind of want to keep diving in. That's just me doing what's in your house. All right. How did you build your house? Did you build your house or did you buy it or you're renting it,
No,
right?
I'm
Yeah.
renting,
Yeah. So someone had to build
but
that. Go ahead.
I'm renting from a corporation that I
Hmm.
actually am gonna start investing
That is smart. That's
because I like how they do this.
yeah.
I like the whole idea that they have come up with renting these houses and they do it across the United States.
Look up REIT stocks, REIT. They're like basically real estate like stocks that you can buy. But the reason I'm going with that is I bet you they had to go get all their supplies. I bet you there's a Home Depot nearby. or Lowe's or some kind of company like that. You know what I mean? Like
Yep.
literally you have to realize little things like that. Where do you go eat for fast food sometimes? Do you go to McDonald's every now and then?
Oh, I hate
Yeah, you hate McDonald's, but guess what? They've sold how many billions of burgers? Look at their stock, and their stock is getting bigger because they're starting to do, I guess you could say, more healthier options. And then you start looking at
Yep.
stuff like who owns Arby's? Who owns Wendy's? You come to find out it's this big company that owns all of them. And you start
So
diving into this and you start seeing where's your money going essentially, and who you can own that stock if you believe in that company. Go ahead.
so the you're bringing this up perfectly because this is exactly something that I wanted to talk to you about, and I brought this app up to you
Yeah.
already. The app's called Griffin,
Yeah.
and you said that it's a your basically your response was that's a really great idea. What it does is it connects to your bank account and it watches for what you spend money on. And you choose, or well, right now there's no choice, but it's basically every time you spend money on something from a company that is publicly traded, it takes a dollar from your bank account, an extra dollar, and it invests that dollar into that company. And it does these investments weekly.
Yes.
So the way I think about it is, and I've already do this in my own bank account. It has a feature that every time I swipe my card, it rounds up to the next dollar and puts
Yeah.
that into a savings account. It's painless. I don't miss the dollar. I mean, some people might because they're that, tight on money, but I'm
Yeah.
not tight enough to where I can miss a dollar every purchase.
Yeah.
Basically, every time you purchase something, round it up to the next dollar, and if it's $12, you paid 13. Thing. The
Exactly.
difference is that extra dollar is automatically going to be invested in that stock. So when I go purchase Wendy's or Taco Bell or KFC, that's Yes Yum Company or something like that. It's going to invest in dollar every time I do that. If I go there 5 days a week, that's $5 a week. And now all of a sudden I have a ton of this money that I didn't even miss in the first place, now invested in a company that can also return me more money
Yes.
if the stock goes up, if I cash out. So I wanted to talk about that. What do you think about that? Because this kind of sounds like what you're getting at is like it, but it's more painless because I don't have to think about what companies I use. This app uses my card to figure that out and just invest for me anyways. Is that good? Is it bad? Is there
Two things with that.
something about
A,
that?
you're
Yeah.
paying somebody to buy what you should be researching. So you're going to pay like a little bit there. They're taking that dollar and they're investing it for you, but you're paying them too. Don't forget that. Now, if you open your own brokerage, you will have commission free, then you buy the stock. That makes sense. So when you're
Yes.
using that company, they're going to take a little percentage. Acorns does the same thing. Like they're managing your portfolio, but they take a little percentage of it when you use it. Now, I don't disagree with this in terms of just to get you guys starting, just to get you guys moving into thinking what it is, because you'll start to see it. Like I bring this up all the time. In '08, Amazon was $50. I think right now it's trading like 2,900 or $3,000. So
A
like,
ton. Yeah.
yeah, imagine using that back then, and still imagine using it now for like companies like Etsy has done so well, and obviously COVID has helped with that, and other ones. I'm trying to think of the other one is it not Wish? I think O. I'm trying to remember the other one that everybody basically anything online thrived this year because of COVID. You can't go out, can't go do things. But so did Walmart. So did Target had
Zoom.
ridiculous, yes, Zoom. That's another, yeah, they thrived
Zoom
in
was unheard of before the pandemic, and I only knew about it because my job already used it. That's
yeah,
all it really was used for. And then all of a sudden, oh, it's free. Oh,
yeah,
schools can use it. Oh, it
yep,
works perfectly for everything we need to do from home.
yep.
Dude, they went bonkers over that this last
Well,
year.
their base went
Sorry.
up. Like the it's
Oh yeah.
ridiculous how much that got added to that. That being said, the second thing is you can do this. Like I promise you, you can do it. Like I know you're like, well, it's automatically doing what I'm buying and whatnot. So yeah, if you go to Walmart, it's probably gonna give you a stock of Walmart or Target. You know what I mean? It's not
Yep.
gonna do what you individually bought. I bet because that would be way too hard for them, in my opinion. They could be on that level, and I could be completely wrong, but I think they got to like, yeah, it's gonna be where you
No,
went
you're
to. Yeah.
You're exactly right. It's where the transaction took place.
Yeah.
And
So
and there is a little bit of an issue with that because it actually does count, like whenever I move money from one account to another, it counts that as a transaction, but it doesn't know what to put it to. So there's a little issues with that I'm sure they're working on. But yeah, it only works if I go to Target and I spend $4,000 on a whole bunch of different things. It's just going to count that as $1 for Target.
yeah, that makes sense. And on top of that, you're buying slices of a company. You're not buying the full stock. Now, this could
Right.
turn out to be really, really good for you if you get a company that you don't really know that you buy, or not that you don't know, but like you're not that big in. You know how you were talking about how your grandpa like investments from other companies? I will never forget this story. It's my dad and my grandpa. This guy comes over and said, "Hey, would you like to invest in this company? It's called Home Depot. Stocks are only like $1. Like you can buy as many shares as you want, but we're starting off at like it's $1.15. Would you like to invest?" They both said no because they're like, Home Depot, we don't really, yeah. Home Depot's like 360. Like imagine just dropping $100 on them now or back then, and they pay dividends. So them paying the
Oh,
dividend is like that's something we haven't even dived into. Is like when you buy certain companies, certain stock, they pay you a dividend for owning that stock. They can take it away at any time, but most companies you'll see that they consistently done it. Microsoft, Apple,
so
Amazon
so
doesn't. So go ahead.
define dividend. What does that mean?
That means basically the company is going to pay you a percentage, either depends on how they have it set up, monthly, quarterly, yearly, and you'll have like an annual dividend yield. Now you'll see that with all the stocks, which means that's how much you'll make a year. I think Amazon is something, or Apple is something like $2 a year. It's something really low considering how high the stock is. But the thing is, when you start with that stock and it keeps going and adding up, that dividend can either sit on the side and give you more money so you can buy stocks later, or you can use it to buy slices of that stock. So the dividend is buying the stock that you're owning and giving you more shares. So I do that with Apple. I do that with Microsoft. I even do that with mutual funds and ETFs that I have that basically reinvest into it. So the money that I put in there, not only is it getting going up in value because of how some stocks do, it's buying itself. So like when that pandemic happened in March and everything dropped, all of the time like the dividend buying, I got more shares of Microsoft, more shares of it's a VFIX, it's a mutual fund. They bought more shares of that when it dropped because the dividend, I still got that monthly dividend. And it just kept doing that and doing that. And as everything went back up, I got more of an increase because it had been buying itself back into there. It's a good way to kind of like you can keep the dividend money, but you might as well just reinvest it because it's small but huge at the same time. But it's really
That
cool to
makes
find a
perfect sense.
it's really cool to get a company that pays a consistent dividend. If you have $1 million, and I'm pretty sure someone can hop in here and correct me, and you buy AT&T, their stock, right? You can live off the dividends that they give you yearly and monthly. It won't be that complicated. The only thing you have to worry about, like I said, dividends are not guaranteed. They can say, you know what? We can't do that anymore. You want to know which one was really high dividend that was like damn, I love that. All the cruise lines, they were super high and they were getting so much money back just for owning the stock. Then COVID happened. They had to take that away. They couldn't pay the investors anymore. So then the dividend went away and then the price went down. A lot of people got hurt in that area. You know what I mean? So
Because
you
they
got to,
relied on the dividend.
yep, they couldn't, yep. And also they just, they, that's where they're trying to get you to buy it. They're like, ooh, buy us. We have a high dividend yield, but we can take it away. We can lower it. We can change it. We can do whatever we want to it. You want a company that's been consistent with it. Microsoft, Home Depot, Apple. There's a couple more, but those are the ones that I'm ringing in my head that I think you guys would understand and know well. But those
Yeah,
are,
and I think that's an amazing idea to just use the dividend to buy more pieces of the stock.
yep,
Absolutely. I mean, that is, in my opinion, the sheer definition of making your money work for you.
you can.
You put in money and it gives you money back. You don't net you did like the way I am going to invest, at least this for now, because I don't
Yeah,
have that much extra money to invest. I'm going to invest what I don't miss. So if I have $100 that I wouldn't miss next week or next month or something like that, I'm going to invest that. If that $100 turns to $0 2 weeks later, okay, that happened. Now, what's amazing about the dividends is that $100 then turns into $105, and I take that $5
oh,
extra and I put it back in. So now I have $105 investing, and then that $105 now gives me another $5, and I keep doing that every month. 5 years from now, I mean, I'm not going to do the math in my head, but I would have, close to double what I originally put in, and my single investment is still $100.
So I'm going to start right here. This is where you all need to start. This is what you need to do for your children and for yourself if you're starting investing right now. I'm not telling you what to buy, so you guys can't get mad at me, but this is how you need to start. You need to make a Roth IRA. And like you said, money you're not worried about touching, you put that money in there for you and for your child. Because the thing is, you just explained compound interest, basically over time, how the stock will go up and how over time that dividend is reinvesting into itself. And that's why I bring that up. Like if Leah would have started one, that's how I came up with the 5,000 with Microsoft. She starts 1 year, just 1 year, she puts 5,000 in there for her kid. And then 5 years from now, it's already 20 grand. Oh, thank you, Sarah Channel, for streaming or hosting her stream. But yeah, like that is, you guys need to start a Roth IRA. I don't care if you use, I have Webull on my link tree. I don't think Robinhood does Roth IRA. You can use any of your brokerage, but the people who are in here, the people who are in my other chat, you guys have got to start your Roth IRA, because what happens, you put that money in there, you get the gains when you go to retire or when your child hits a certain age, they can withdraw it and it's tax free. And you want all that tax-free gain. Go ahead.
So before we get on the Roth IRA,
Yeah,
because I have tons of questions about that.
yeah.
One of my viewers asked, are there any companies that can't pull the dividend? I think that's what they're talking about. But is there any situation where the company will not be able to, or is it always up to the company themselves?
Always up to the company themselves, unless there's something fraudulent, like something crazy that they stipulated or said that they could get in trouble lawyer-wise. But no, they can easily take it away, just like Carnival did. And like a lot of the cruise companies, I remember, or I think it was Royal Caribbean, they had a nice one. It was like you owned all their shares, you were making a decent chunk and change in dividend. And some people use that as passive income, but they can take it
Yeah.
away if need be. Like that's why I keep saying Apple. Apple has like billion in cash on hand. I need to check it again. It could be higher. They have a bunch of money, so they're going to try to keep their investors happy. Microsoft's another one. Home Depot's another one. They understand, and you got to pick these companies that have been here for a while. You're going to see lucrative ones like electric companies, which are not bad to invest in. Don't get me wrong, but you're going to see this high dividend. And this happened to me. I bought like $100 worth of this one. It's a high dividend, right? They got sold, they got changed, and then I got this huge dividend, and then they dropped it immediately. Like no more dividends. It's just like you're going to run into that. It's okay though. Like
Okay.
just pick companies you
So rule
believe
of
in.
thumb, don't rely on the dividend.
It's pretty consistent
So
though when it comes to certain companies. Like there's a real estate one called O. They've been raising their dividend for the last, I think, 40 or 50 years. They haven't got rid of it, and it's been going up every year. So you're gonna see you can rely on it on certain companies. Like there's some that have the, it's kind of like some friends you can ask for money, they got it, right? They ain't gonna bail on you or anything. And you got those some friends where you're like, I bet you he won't give me back my money. And it's the same thing with that. So you'll be good.
gotcha.
Yeah.
So
That's
with the Roth IRA, for um, the first major question I have is, what the heck is a Roth IRA?
it's
It's such a scary name that I can't think means anything, and it seems so complicated. Is it complicated, and what is it?
it's not complicated, and I'll be honest with you, it's so here's how powerful it is, guys. Once it just on your income alone, once I hit 120,000, I cannot use my Roth IRA. I can't contribute to it anymore. You can still use it, but I can't contribute to it once I hit a certain income. Same thing with combined houses. I don't know what the exact answer is that one because I'm not technically married right now, so I wouldn't know exactly, but I know combined income is factored in as well. Long story short, it can only go so high when it comes to your income because it's so powerful. It literally is a way for you to invest your money. So when you go to retire, you get to get all the gains tax free. The reason it's so scary is when people find out you can't touch this money until you turn a certain age, which is true and not true. You can withdraw the contributions you made, So the most you can do this year is 6,000. So you can take that 6,000 back and not pay a penalty. If you made any gains, you would have to pay the penalty on that. So I'm not touching it. I'm leaving mine in there. I'm not taking out the contributions or anything. Because what you wanted to do is grow. I keep bringing up that Microsoft one for a reason. That's a good example of you started your kid with, here's another one we haven't talked about, Google. You use Google for everything. You use Google Chrome, you use Maps. That would have been a nice company 5 years ago to start investing in for your kid or for you to put in your Roth IRA and not touch it. The biggest problem, and then Warren Buffett has said this, everyone has said it, people see it dip and they're like, I got to sell. I am losing money. This needs to be money that you're going to be okay with going up and down and not worrying about it. If you're worried about it, you need to fix your financial situation first, because the biggest thing for me, like for example, I had 18 shares of Amazon when it was at $1,900, right? Or yeah, roughly 1850. I sold it once it hit 2000 and before the pandemic hit, because I was like, I think this is going to get really bad. If I hold on to that, do 18 times 1,000, that's how much extra I would have got. But the biggest problem is I sold it because I got scared. That's something you guys definitely, when you're investing, I'm trying to tell you, because this is what I've learned. I'm telling you what I've learned, what I went through, so you guys can sit there and be like, okay, put the money in there, pick the companies you want to get, and just don't look at it. Believe in those companies, and you can look at it to be like, you know what? I don't think Tesla's doing well. We got to sell what we got, take our gains or take our losses if you need to, and do that. By the way, if you're in a brokerage, you take a loss, you can put that on your taxes, FYI. You can only do up to $3,000, but that's just something that's kind of slide in there for some of you guys who might have started investing this year and you're like, $1. You can put that to kind of like offset the gains. But at the end of the day, a Roth IRA is the best way for all the middle class, all the poor income family to not only set money aside, but to grow. So one day when you go to retire, or even if you do have to withdraw and pay the penalty, have something that's been there growing for you. And I'm sure your grandfather probably had a Roth IRA, if I'm being honest,
He
or a
probably did,
traditional
yeah.
Roth.
So a Roth IRA, from what I'm hearing, is different than a savings account. It's not a savings account. It's an investment account, right?
Yeah.
So
So
you don't just put money into a Roth IRA and it gets a standard interest rate per year that you
hmm
just get back. You put it in there and you say, "Hey, this Roth IRA, I want this money to go towards these stocks."
yep.
And it goes towards those stocks. And then if you can explain after that, how does it make money?
So once you basically buy those stocks, they're either going to go up in value or you're going to collect a dividend. As they're going up in value, let's say you invest 6,000 into Microsoft. I keep using that one. You notice that it's gone up every year. Leave that money there, but those gains, when you go to retire 30 or 40 years from now, however old you are, those gains will be tax free. You get all of that back. Or you can do this, and this is what most of my friends and I are doing. We're seeing gains in companies we really like, and we're like, okay, we don't think it's going to go any higher. We think this is the highest. We're going to sell it, and then we're going to reinvest into another company. So once you buy the stock, you're not stuck with it. You can always sell it and buy something else. You're not forced to be just right there. You know what I mean?
Without a penalty.
Yes, you can. Yeah, you can always sell it. You can't withdraw it. That's the only thing. You can always buy and sell. You can't withdraw, and you can't you can't go over your contribution. So if it's 6,000, don't go a penny over that. Anything you get go over that, you're going to pay a penalty not only for the gains but for doing that, which is really really high. So going back to when you said a savings account, if you leave your money in your savings account, right, and you put it in, we're just going to pick, I'm going to tell you one because I know the average, usually ETF that mimics the S&P 500. Over time, that savings account, the rate of inflation is not going to, it's not going to help you. Like, that famous scene with Futurama where he left money in his savings account and it's worth like millions and millions of dollars. It won't work like that because inflation keeps going up. Where with the ETF mimicking the S&P 500, that should continue to grow at least, it depends, but between 10 to 12% depending on inflation, which is way more than your savings account. I think your savings account might be 2, maybe 3 at the most, maybe. So it's really what happens if you die before you retire. So you have to leave somebody as a beneficiary. That goes for anything. If you want anyone to get anything, Make sure you do that. My grandparents didn't do that, and it was chaos. Make sure you do that for your family and loved ones. A whole different topic, but you need to make a beneficiary. Otherwise, everybody gets to fight over it. So
So, I think I only have one more question about Roth, or sorry, three more questions about a Roth IRA.
go for it.
First one, what is the minimum amount to open up a Roth IRA, or is there a minimum amount?
So to open a Roth IRA, there is no minimum amount. You can put $50 in there. You can put 100. My mom started with I think 300, and she got it up to like 3,000 now by buying stuff that she believed. And the
Okay.
thing is, it's like there's no minimum, but there are some stocks that like mutual funds that require you to put down 3 grand to get into their basically portfolio of stuff they own. Like VFIAX is a mutual fund that requires you to put 3,000 down first before you can buy pieces of their stock. So there's some
Oh,
that are like,
interesting.
yeah. So there's some that are like that. Most of the time, I mean, if you believe in that company managing that portfolio of all the top 500, their percentages and whatnot, then you can buy them. Otherwise, you can look at ETF that are not necessarily cheaper, but don't require you to put in more. And you can make it reoccurring. You could do honestly once a month if you can, 500 a month. Investing into stuff you believe in is a great way to do it because I think that comes out to $6,000. I could be wrong, but 12 times 500, I think.
So, is
Yeah,
6,000 just like the general limit this year?
yeah. It used to
Does it
be.
change every year?
It does change. It used to be only 5,500. So when I first started, it was 5,500, and it didn't go. It just went up to 6,000 the last two. Someone asked a good question.
Okay.
Can you go negative in investing? Yes. When you buy something, it's probably going to go down. Like Disney, for example, was at like 120 when I bought it, and it went down to 100 at one, and it just went back up. It's going to go up and down. You can't be worried
Well,
about that. Go ahead.
I think they meant, are you gonna can you go negative in the sense that you would owe money? So if I put $100 into a stock and that $100, is it just gonna stop at zero, or will it ever get to a point to where I would owe more money? Is what
You
I
will.
think they're asking.
Yeah, that's good. No, you won't owe anything. You will just have missed out on what he said. You will just miss out on, for example, if you vest into everything. What do you think of SEP IRA? I am self-employed. I still use a Roth IRA. I don't use a SEP IRA, if I'm being honest with you. But there's a lot when you come, like some of these questions you guys are going to give me are going to be like way too technical in terms of like there's easier way or like easy ways if you are your own self-employed, you have your own business to kind of sneakingly put more money towards saving Roth IRA, 401k, which becomes extremely complicated because after that, that's where I would be like, you need to ask a financial advisor because they're going to be able to tell you a lot of discrepancies that I won't know in terms of that. But I know I am self-employed and I use a Roth IRA. It's just because I want to get the most out of it, you know. But yeah, you won't ever go
So
into negative.
right, so you put that $100 in, and let's say the stock is $100 a stock. You buy one stock for $100. I don't think unless even the yeah, I don't think a stock ever will go down to $0 per stock, right? Like it always starts off at a certain price, and if they're going out of business, there will be a payout for shareholders, right?
Sometimes
So
it
so
depends. They can go bankrupt and you get nothing. You remember Enron?
oh, okay. That
Yeah,
that
like
was basically my question. So the what I think I was getting at is like you'll never see it go down from 100 to 50 to 25 to 1 to 50 cents to 0. Somewhere in that point they're going bankrupt, and you're either going to get nothing or you might get a payout at some certain point. The point is though is you put $100 in and you're not going to get your $100 back. You might get a portion of it or nothing at all.
yeah, it just depends on what company you pick. Now, lately, this is what's been happening. You've heard Sears going out of business and Macy, all that stuff. Other companies have been buying them. If that makes any sense, and then they merge with other companies, and then you kind of make it from there. But that's why you have to do your diligence. You have to look into why a company is thriving and how well it is thriving. If that makes any sense. Like I wouldn't invest in Walmart. Now, I know a lot of people are going to be like, "Oh, okay, cool." The reason I'm saying that is just because I don't believe their values. I don't believe what they're doing adds up. You know what I mean? When I go to Walmart, I'm like, "How quickly can I get out?" I go into Target and I'm like, I know where I want to go. I like this. It's organized. You know what I mean? Like it's little things like that and what they're doing for their future. But if it hits
Yeah,
zero,
and
1 second, if it hits zero and goes back up, are you still in? Yeah, well, it won't hit zero. If it'll get really low, like $1 or something like that, and then it'll go back up in terms of like that. You won't
yeah,
see something that crazy.
yeah. So I think a lot of people don't understand what it means to own a stock.
Yeah.
And correct me if I'm wrong on this, but this has been my understanding of it. You own a piece of a company, but I like to think about it as I own a physical piece. So,
Hmm.
um, like I don't think many companies or any of them do this, but imagine if you bought one stock of Microsoft and then Microsoft sent you a, piece of paper that represents a stock. It'd be like owning $1 of Microsoft or something like that.
Hmm.
You still have that piece. That
Yeah.
piece will never go away. It's how much does that piece currently worth? You bought it
Yeah.
for $1. Is it still worth $1 or is it now worth $100? So that's where that return of investment comes from, is that one piece that you own, you only paid $1 for it now, or when
Mhm.
you bought it, but now it's worth 100. And if you sell that piece to somebody, you're giving them that piece of that company and they're paying you $100. You now made $99 off of your investment of $1. That's
Exactly.
kind of how it works, right?
Yeah. You basically have to hope that that company goes up, and then you profit off where you bought it off in there. Like for example, just to show you with GME, I invested I think 1,000. The average cost is 116 times go down 8 shares. So roughly I invested $800. It's up $600 right now. So if I sell it, I'm only making the gains off from there, and that's where you come into short capital gain, short tax capital gains and whatnot. That's a different story, but it's just to give you an example of that one. So that one I'm up $600 right now because they're at 201. So like I'm gonna leave it open though so I can watch it instead in case this explodes. But long story short, it's just unreal how certain companies grow. If I'm being honest with
Yep.
you, Amazon. Okay, listen. If you never Apple, there's another totally thing. Apple splits. That happens sometimes. Companies will split the stock, or one share becomes seven, or one becomes five. You know what I mean? If Apple never splits, it's $27,000 or $28,000 a share to buy them. Like that's astronomical. Imagine
That's
owning
insane.
little, yeah. Imagine owning little pieces of that company. Just one, just one little share. And that's how you kind of have to start from there. You got to be okay with picking, when you're really younger, a little bit of aggressive one, and be okay with picking the safe ones. Like Microsoft is such a safe, simple company, not ridiculous gains, but trust it and just make sure you're okay with that money going away, or making sure that you're okay with selling it when you need to sell it. Because there's been times where like I said, I've invested in a company and I'm like, I should probably sell this while I still have a gain or not that much of a loss, simply because they change where they're going. Like I don't like where they're going.
So one more question before we move off of the Roth IRA. How do
Yeah.
you get a Roth IRA? What do you
You
need
can
to do?
you just need okay, so this is what scares a lot of people. You're gonna have to give them your social security information. You're gonna have to give them your address, your income, because they have to make sure legally that you're able to do this. I told you there's limit. Once you make a certain income, you can't do it. Like you cannot get in there and to use the Roth IRA anymore. So that's why I tell people, if you're one of those people who are like, I'm gonna grow, I'm gonna make it, start that Roth IRA, start it going now. And then when you hit those, the bracket where you can't contribute to it anymore, it's chilling there for you, making money, even though you're already making this much money. But you just have to give them that information. You can do it through your bank. You can do it through any brokerage you want to do it through that offers it. I bring up Webull because I have the link tree in there, and you can click on Webull and easily get that. But going back to like it, you can use your bank. Your bank will offer it for you. They might charge commission when you buy stocks, and you might not be able to look at it all the time to buy stuff. So I used to have USAA, and then we went to Charles Schwab because they changed over to that. They transferred their brokerages and all that to them. And like I watch that every day. I check it every day. I look at it every day. I see if I want to buy something. I have it set up to once a month. I want to buy a certain stock. But you can, it's so simple. You can do it through pretty much anyone. Just make sure that they're a certified bank. Don't get on here and be like, you know what, Eric, I found one that, never even heard of this name, and you made a Roth with them. All right, cool. I mean, I'm glad you did your research. But yeah, like
Good luck.
Weeble's on there. Yeah, Weeble's on there. Right now, if you want to, you can transfer your brokerage wherever it is to Weeble. They'll give you a lot of free stocks for it, FYI. That I don't get anything out of that. That's just me telling you that. I have one question I want to read real quick. So if you buy one share for 100 and the market crashes and they go bankrupt and provide a $50 payout, then you lose the 50. Yeah, essentially like that. But it just depends on what you're investing in. This is a good example. Like once we have a couple more Roth questions, I'll go to the other screen. I want you to pick a company that like I want you to look at Microsoft last 20 years, Apple the last 20 years, Home Depot the last maybe 30 years. Like look at them and you can kind of see how I don't I, that's the other reason why I bought more shares of Apple and why I have options, which is a totally different topic. I believe in them long term. They have so much money that whatever they decide to do, I think they'll be fine. And you got to learn to do that. Don't pick these really cheap clothing companies or really cheap makeup companies or really cheap trying to think of another one like stores that you just or car companies that you're like, I use it. I should invest in them. Do research on them, man. Make sure they have enough capital. Make sure they're making a revenue. That's where when you're checking the stock out, you can see their revenue and you can see their earning. You can see what's going on there. It's not that hard to look at two stocks or look at the two little graph and be like, ooh, they're spending way more than they're making, or they're not making a lot. And Tesla's a big example of that, but that's a different topic. Yeah.
Yeah. Yeah, that's so one thing that I definitely want to do, and this is probably more a talk on what type of investing you want to do. Do you want to do, because I know there's what, like three levels. There's of risk. There's the type of risk.
Mm,
You could do high risk, medium risk, low risk. Um, and my question for you, and this is my understanding of it, is a high risk would be investing in maybe like a startup that has a good idea, no history. You don't know what they're gonna do. You don't know if they're gonna make it. Like it is, that's as high risk as I can think that it can get.
yeah.
Moderate risk would be something like maybe Tesla, that is always riding that line,
Yep.
that they're doing cool things, they're innovating, they're leading the industry, so to speak, but they're also spending a ton of money doing so. They're flirting with bankruptcy every once in a while.
Yep.
People are messing around with their stocks, trying to short them and doing crazy things like that. That to me is a moderate risk where I could put $1,000 in today, and 2 months from now, that $1,000 could be worth 200. Or it could be worth 5,000. It's up in the air. And then low risk would be something like Microsoft, or like you mentioned, Home Depot, that have been around for 30 plus years or longer, that you can go back and look at the history and see how they do throughout every single year, and gauge, you can actually gauge your risk.
Yeah.
Versus moderate and high risk, you're kind of like, I can't gauge it. It's a crapshoot.
Now,
So is
one thing
that
I'm gonna
is that kind of right?
you got it all right. Here's the one thing I'm gonna say that you didn't say. When you chewed, you could lose all of it. It really could happen,
Oh,
but
absolutely.
it's not like I know you guys get so scared when you hear that. You're like, Eric, I can't afford to lose this money. That's where you got to look at your financial situation and you got to make sure the companies that they are investing in, you align with that company. Like, for example, Costco is a good one to really invest in because I believe in everything they do as that company, everything they do. And their stock has been consistent, normal, and safe, and all that. But it's just like anything can drive anything out of business. For example, GameStop was on pretty much driven out of business because of shorting the stock and also because they haven't innovated them. Now, people believed in that stock. They believed GameStop would innovate themselves and change, and people bought them when they were
And they're
$5 a
doing it.
share. Yeah, like today they just did the e-commerce idea. They're like really moving forward to that because they're ready to completely grow and change and become the powerhouse they really could be if they do it. That's why Amazon's been so sneaky. All those malls you see closing, buying those. They're buying them at a discount because they're putting their competition out of business and they're using those as warehouses. So that's another company. Like I don't think that's very nice, but Amazon's doing they're protecting their bottom line and making sure they stay successful. So, but
Absolutely.
yeah, I just want to point that out before anyone's like, oh, so I picked the intermediate or the easiest one, I won't lose anything. You really still could. It just depends on who you believe in and who you trust to manage those funds. So, do you have any other
Yeah,
questions?
I mean, you think about I just want to say something on top of that. You think
Yeah.
about these companies that have been around forever, like Microsoft and Apple. Actually, is a really good example.
Hmm.
A lot of people, if you're around our age, you were old enough to experience and kind of understand what happened with Apple when Steve Jobs left, and then when he came back. Um, there was so to speak a little bit of infighting within Apple,
Yep.
and Steve Jobs was that extreme innovator pushing um, to the bleeding edge all the time, and that's kind of what made Apple what it was. And then Steve Jobs left, or essentially they kicked him out.
Yeah.
They kicked him out the door, and then Apple went down hard to the point where the company nearly went out of business.
Yeah.
And they got Steve Jobs back, and what did Steve Jobs do? He came out with the iPod. He pushed for the iPod. He pushed for the iPhone, and then he pushed for the iPad.
Yep.
And then guess what? Apple like left its old self in the dust. It became a whole new beast.
It did.
So Microsoft's another situation. Something like that could happen within Microsoft or another company. For example, Google could have been Microsoft's end if Google decided they wanted to do that. Google didn't. They decided at some point, I don't know the exact time frame, but at some point they decided that they kind of wanted to play along with Microsoft. They wanted to be a player, not an owner. And so a company like Google could come in with just amazing investors, amazing innovative people and employees and all this crazy amazing stuff, and just leave Microsoft in the dust. So you can own hundreds of thousands of dollars in Microsoft one year, and then the next year that hundreds and thousands of dollars could be cut in half because this new
Yeah.
company came in and just took over.
But if you
So
still believe in
nothing
that
is
company, that's one thing I want to say. You never lose anything until you sell. Like everything you gain is
yeah,
imaginary and everything you lose is imaginary until you sell. So just to point that out
exactly.
because you brought that up. But keep going, man. I didn't mean to cut you off.
No, it's okay. So that's why I wanted to point out that when I mentioned the risk levels, there isn't a level of no risk. There
Yeah.
isn't. It starts off at low risk,
Mhm.
moderate risk, high risk. Low risk is for literally everybody that is, or every company that is comfortable, I guess is a good term that you can use. Most people are comfortable investing in there because they're not going to lose much, if anything, and they most likely will gain a little bit. Because
Yeah.
Microsoft, for example, doesn't shoot up super fast, and I don't think they will because they've kind of engraved themselves into the industry and they're just doing what they're doing. They're not doing anything crazy innovation wise or anything like that. But their stock still continues to go up. So something like you mentioned, 5 years you might get a good investment on it, but it's not going to be like a couple of months.
Yeah.
Whereas if you invest in something that's super high risk, if they make it and they actually do what you believed in that they were going to do, a couple months later, that $100 you put in there could be 1,000, for example. So that's just something to think about, that there is literally no way you can invest money into a company with zero risk. Not
Yeah.
possible.
Well, it's just like any. It's. I mean, I don't, it's just like investing in anything. You buy a house. That house could have a horrible roof that you didn't notice, or that everybody missed, or there could be problem. But at the end of the
Oh,
day,
yeah.
yeah, yeah. At the end of the day, it's how do you think that house is going to be worth more, right? You're going to fix that roof. And the same thing with that company. You're going to see companies struggle sometimes. Apple's a good example. Microsoft was struggling for a while, and then they get the term as a zombie company because they just slowly do things, but they do things consistently to where like I trust them. I believe in them. They're the biggest. They're the second or the biggest in my Roth IRA. If I'm being honest with you right now, because I believe in them. And then I also believe in Tesla. That's another one, but that's definitely. I'll be honest with you. I feel like Tesla is more of a high risk and an intermediate risk. If
Yeah.
I'm being honest.
I would actually kind of agree. I was thinking about that after I kind of labeled them as a moderate risk. They're more of a
Yeah,
high risk right
yeah,
now.
because
And I think there was a time where they were a moderate risk. Like, I think most people would think that they were moderate risk, but then they keep going back to high. And then they
yep,
might go back down to moderate, and then they go to high again. That's just, in my opinion, if you're investing in Tesla, you're not investing in Tesla. You're investing in Elon Musk. That's how I would think about it.
what he's saying,
Um,
100%. Keep preaching
so
it.
If for example, if Elon Musk got pushed out of Tesla, I would sell immediately.
Yes, me too.
That's my personal preference, because I would actually be investing in Elon, because Elon is the person driving Tesla.
Yeah,
Elon is the person driving Starlink. Elon is the person driving, you know, whatever else, Boring Company, and all those other things. If they went public, I wouldn't be investing in those companies. I would be investing in Elon.
100%.
Same thing with kind of like Apple. I feel like a lot of people probably bought Apple when Steve Jobs came back in, and then when Steve Jobs passed away, they probably sold,
They
which was
did.
probably not, knowing now, that's probably wasn't a good idea, because
Yep.
Apple's pretty much been doing great under Tim Cook.
Yeah,
Um,
Tim Cook. Yeah, you got it.
he's been doing a good job, but people invested in Steve Jobs, not Apple.
Yeah. And it
So
goes the same, like, for example, the rise with Microsoft is when the one guy stepped down. They were like, finally, somebody who might be more riskier, more innovative, more, I want to push
yep.
this company. And sometimes companies struggle with that. Do we want to be ourselves, or do we want to go to we want to see what we can be? But is there any other questions you have real quick? Because I kind of want to show them this, if you don't mind.
No,
All right, cool.
no.
So what we're
So
gonna
we're gonna
change.
go to the Microsoft.
Yes, I want to go to Microsoft, exactly. So we're gonna switch over the scenes here. You're gonna see Microsoft. I get it. Second. Perfect. So right now on my screen, as you can see over here, you're going to see that this is the 5-year chart for Microsoft. Microsoft 5 years ago was $50 roughly, and now they're at 230. They're down a little bit today. So even if you bought today, you would probably be losing 74 cents. Now, the reason I go that is to show you guys, if someone asked, how do you look at these and analyze what you want to do? We go here, pretty sure this is the max. This is how they've been climbing. You can kind of see how over the years, this is all the way to 2007. They hit a high peak here at $50 back in 99. Okay. Now you see how much they are now. You see how people here kept buying. It dropped tremendously, but it came back. I just want to point that out, because
So
I'm gonna hit here to go
I
here.
think
It
I
kind of
think I want to point out that this has to do with, I would say probably mostly Xbox.
Yeah, well, believe it or not, Xbox is not. No, it's mostly has to do with the fact that everything you use has Windows. Like from when you go to the gas station, when you go to swipe in your card,
Oh,
we're still using. Yeah, a lot of that has to do with that. Xbox does help, as you can kind of see, because the first Xbox came back out in what, 04? You can see it didn't move that much, but you can see, like, and also I'm trying to remember, they have their own. They have Outlook. You know what I mean? They have Microsoft Word, Microsoft Excel. You can see how companies have become more and more innovative and whatnot. And you can see how they keep growing. Now, that being said,
gotcha.
I just wanted to show you this. You can see, like I said, someone bought Microsoft back there for $58 a share, right? That was back in 2000. They didn't see that go back to there until 2016. Okay. Now that's a long time to hold, but if you believe in that company and you keep buying once a month, your dollar cost average will even out from when you bought it the first time. And we'll go over dollar cost average as well. But here's another thing I want to go to. I want to say, I find it on easier to look at whenever I am on my. I want you guys to see their revenue. Here's their total revenue and whatnot. They usually have a graph that should have gone or brought up a while ago. Conversation. Maybe it's yes, here we go. You see their financials? Let me make this bigger. It's under
The
financials and
earnings.
everything. Yeah. So when you click on financials on this, on the chart up there, you'll see profile, financials, analysis. Do financial. You scroll down to the graph here. You're going to see annual and quarterly. You can see their revenue for 2019 was 125 billion, and their earnings was 39 billion. So they're getting a lot of revenue and they're earning a lot of revenue as well. And this is their annual, not their quarterly. Okay. So the reason I bring that up is I want to go to Tesla, this one up, and type in Tesla, because this is where you got to be okay with investing in a company that's not always going to have those good type, type of numbers. So go to financial.
So before you continue, I want to
Yeah.
pull that up as well. Where do I type in
Oh,
Tesla?
so you go up to Yahoo Finance, you type in Tesla where it says search,
Okay.
and you type in Tesla. Make sure you spell Tesla right. Then you'll click on it.
TSLA for Tesla Inc.
Yep. And then you'll go to it. You can see they're down $13. But if you go down, once you do that, and you go down to their financial, you'll see that their earnings, they were below those couple of years. 2017 down almost 2 billion. 2018 down 976 million. This year, or last
They're
year,
up.
2020 was the first time they had any earning. This is what you got to look for when it comes to a company. This is where you could get risky. There is a stock that's $500. That's just Tesla. They were at 900 or almost 900. But that's a good example. I'm going to kind of go back to our normal screen just to show you guys that, just so you guys can see that's what I look at all the time. Now, what these companies do on a day-to-day basis is, like for Warren Buffett, how he's made all his money. He's invested into the S&P 500. There's a story called $1 million bet. Look it up later, learn about it. He bet those hedge funds, people managing that could buy stocks, sell stocks, that they would. He said, "You will not beat me when it comes to the S&P 500. I will make more money than you." And they were like, "Fine, deal, let's do it." They couldn't beat him. The S&P 500 is the top 500 companies right now that have consistent earning. They're the big movers in terms of, like, Tesla finally got in there. By the way, last year Tesla wasn't in it, and you can look at this just to show you. While you have your computer still up, just so you can go to it real quick. Go back to Yahoo Finance. Type in
Okay.
BFIAX. You don't have to have it up, but this is what I use to invest into the everything that I'm talking about. In terms of, like, they're going
The
to have the top.
Vanguard
Yes, Vanguard.
Vanguard
That's exactly.
500 index.
Yes, I got that one when it was back here around 250. So the reason I bring that up is because they're investing into the top 500. This is something you need to look into when it comes to ETF, when it comes to stuff that they own. So I'm gonna tell you which one to click on, and then we'll bring it up. The only reason I forgot about explaining this one. All right, here we go. So you're gonna go to holdings on Vanguard, okay? And then we'll switch the scene over again. This is just a simple one so you guys can see this. So this is BFIX. It's Vanguard. It's a mutual fund, right? You'll see their holdings here. You'll see their cash, their stocks, the bonds, what they own. Scroll down to the bottom here. The top 10 holdings, 28% of this fund is Apple, Microsoft, Amazon, Facebook, Tesla, Google, another Google, Berkshire Hathaway. Warren Buffett is in charge of that. Johnson and Johnson, JP Morgan and Chase. That's their top. That's what they own. That's what's been like their top 28% right there. And they have a bunch of other things that you can look at to see what they own. You can scroll up and see that 24% of it's technology, 8% of it is industrial, energy. I bring all of that to you because what you guys need to do is you need to look at ETFs if you cannot afford this one. There's a simple one, I want to say, no, that's SPY. SPY is still up there. SPY is another 500 ETF, but this one is an ETF where you can buy pieces of it. The reason I bring all of that up, and that's where we go back to the S&P 500. S&P 500 was $8 back in 1942. Okay.
Ooh.
Yeah. So it shot up in 1958 all the way to $48. Okay. I'm going to zoom really far ahead here. We're going to start because everyone knows 2001 and they all know about 2008 being one of the worst times for America, right? If you look at 2001 on the map here, you'll see that they were $800 S&P 500 at the low. If you bought then, it went up to 1,530, and then the recession happened in 08 and 09, right? It dropped back down to 890. Let's just say you bought then at 890, or even if you bought at 1,500, it already went back to that in 2015, just 6 years from that. It's already gone back higher than that. Every dip, even when we dipped for coronavirus, it went all the way back down to 2,300. Right now it's at 3,859, not far from 4,000. These are the top 500 companies in America that are in this S&P 500. and it's always changing. They're always adding and removing people or companies, and it's just been consistent. Even when I go back to the recession, even when I show you all the recession, this is what people are investing in. This is what the rich have been doing for years, buying pieces of the S&P 500 and just relying on it. That's what the when you said the you had the intermediate, the risky one. What was the lowest one? Do you remember the name that you called it?
Low risk.
Low risk? Oh yeah. Well, so the low risk one, this is what they're doing. They're taking the S&P 500, they're picking those companies and they're mimicking it. So what I did,
Yep.
because this is what I wanted to do, that S&P 500 doesn't move that much. It does consistently, but I look at what they're in there and I buy those. I buy Amazon, I buy Apple, I buy all those different stocks because that is what's moving the S. And you look into that and you make sure you buy pieces of that and you never look at it. Because the thing is, it's like if you're too worried about, oh man, I got to check Apple every day or Tesla, you buy the S&P 500, whoever's managing that will take care of that for you. You don't have to worry about it after that. It's a consistent way to invest without really worrying about losing anything. And that's what Warren Buffett's been doing for years. And that's what a lot of companies, Vanguard, for example, that's a investing company, but that's a banking company as well that has just been killing it by having yes or mutual funds that have the top 500 companies in there, consistent gain. So
So, can we, if we still have a little bit of time,
yeah,
um, can we shift over to another type of investment that I'm curious of your
go ahead.
thoughts on? Cryptocurrency.
Okay,
So,
go ahead.
cryptocurrency is what I got started in. And not really. I don't want to make it sound like, oh, I'm a big investor in cryptocurrency. I'm not. I don't
You own
know
2 million
half the crap
Bitcoin,
I
guys.
yeah, I wish. Holy crap. Um it it's something that got me thinking about investing and what it actually meant. And so to kind of go on your to go off of your beginning story about how you got investment or got into investing and whatnot, that's kind of how I got into it. But I've
Mm,
always been interested in technology. When anything new or technology wise comes out,
yeah,
I want to know about it. And when Bitcoin came out, I wanted to know about it, but it was so complicated, which I think had to do a lot with the fact that it was in like an investment type thing. I didn't know much about it. I didn't buy into it. I was more on the lines of mining it. And I was like, oh, so you're telling me that I can trade my processing power and electricity bill, basically, and I can get paid for doing this? That scared me and excited me at the same time. One, it scared me because I'm allowing access to my physical hardware from something that I know nothing about.
yeah,
And it excited me because of the potential in the future of what that actually meant. And since then, that potential is I was exactly right to be excited about that, because since then you can opt in your computer to do processing for researching. When COVID started happening, I spent probably 6 months with my computer at full tilt trying to figure out, the RNA and all that bunch of stuff about the
yeah,
COVID virus and whatnot so they can develop a vaccine. I gave that willingly, free. Here you go. So it opened up the technology for that kind of stuff, but it was really scary because I didn't get the investment side of it. I didn't get what it meant to own a Bitcoin. I couldn't put it together like owning a piece of a company because I didn't know what Bitcoin was. It didn't seem like it was a company or anything like that. Now, what I kind of understand about it is you're investing in a technology, not necessarily a company. But on top of that, there are real tech companies that instead of going publicly traded on the stock market, they open up their own coin and they are being traded with that coin.
yep,
So there's a company called, I think it's Stellar, that is doing this new thing with transactions. That is kind of what, if I remember right, what Bitcoin started off with, was just like, how can we get transactions
yep,
immediately verified, securely verified, and all that stuff without having to do kind of like what the normal is. If you wire money from one bank to another, they literally have to call the bank and transfer the money.
The
And even
fee.
some banks, the smaller ones, won't do anything until they physically get cash in their hands transferred
Yep.
from that other bank. And that can take way longer than 3 to 5 days. Whereas Bitcoin kind of started off with the whole blockchain thing is the ability to securely verify a transaction instantly. And it wasn't really instant in the beginning, but it is instant now. And there's a bunch of other companies that have started up, like Stellar, for example, that are expanding on that. So you're investing in that technological advancement pretty much. And it is a whole lot different than stocks, because you would think that something like that would be high risk. It's not. I've owned 90 Stellar coin or whatever the heck it's called,
Yeah.
and it has consistently gone up. Sure, it dips a little low every once in a while, but if you look at the long term of it, it has consistently gone up. And there's other companies out there too that have started off with something that had nothing to do with blockchain, nothing to do with transactions or anything like that, but they went publicly traded, quote unquote, using coin, cryptocurrency. And that's how they get investors, is through that. Now, my main question to you is, what do you think about that? And do you think that's going to be the future of stock?
Won't be the future of stock markets, but I will say this. So back in the 90s, right? There were so many .com like things that were happening, like
Oh,
technological companies.
huge. Yeah.
Yeah, right. That's where
Tons.
cryptocurrency is kind of the same. And I will say this, I do feel like it's more of a risk simply because if you don't know what you're investing in when it comes to cryptocurrencies, people are like, "Oh, I want to buy this one, I want to buy that one." Ripple. What's Ripple? Do you know what Ripple is? Like they don't
Yes,
even
I do.
have any. Yeah, I know you do, but you know what I mean. Like people are like, "I don't even know what it is. Let's buy it." Dogecoin. Like, do you even know what? I know everyone's gonna be like, "It's Dodge or Doge, whatever." Long story short, if you don't know what you're investing in crypto, you could be like be really upset. But going back to
So,
like, I
bef-
do think it's the future. Go ahead. What do you want to say?
so Dogecoin, I just want to comment on that a little bit. I completely forgot about Dogecoin.
Yeah.
Dogecoin was created as a meme to mock cryptocurrency.
Yep.
And it was what, a cent or something like that, a
No,
coin? Like it
below
was
it couldn't
just,
even get to 1 cent. It was like 0.00. You know what I mean?
was
Like
it? Okay.
yeah, 0.00. Then one more would be a one. You know what I mean? It was like that low.
Yeah. And people bought it just to buy it, just to have it. I mean, come on.
Mhm.
You got $1 to spend. Almost everybody has $1 that they can probably, you know, lose and not give a crap about. You can
Exactly.
buy a lot of Dogecoin, or you were able to buy a lot of Dogecoin for $1. And imagine it's just a meme. There was no company behind it. It was two dudes that just started it as a joke.
And one guy's not a part of it
Well,
anymore.
yeah, yeah. He was like, I don't want anything to do with this. It was just a joke. The crazy thing is now that it's being used as kind of like a meme and people are buying it. It was a part of this whole GME thing,
Yeah.
you know, GameStop and all that. They're buying it. It's, I don't know what it's worth at now. I'll look it up here in a second. But um, it got to the point where it got the original creators thinking, okay, we might need to use this for something. And I forget what
Yes.
they've initially brought up, but now they're talking about actually making it a real thing, backing a real company, and all that type of stuff. So the people that bought it as a meme, like let's say you put $100 into it when it was worth, you know, 0.001 cents or whatever, and you
Yeah.
had crap ton of Doge coins, and those Doge coins go up to $25 a coin. Holy
Yeah.
crap, you are rich. You are the definition of rich at that point.
Hmm.
So what I like to do with cryptocurrency, just because it is new, it is exciting, a lot of people are getting into it. I like to play around like that. I own a lot of coins for a very little amount of money and so
Okay.
much random crap. I'm going to admit, a lot of it, I don't even have a clue what they are. Never heard of them before, but it's like less than a cent. So I buy
Oh.
20 of them, you know,
Yeah.
nothing crazy. And was Stellar was actually one of them.
Mhm.
And I'm not going to show this because it's my personal finances, but
Oh, let us
if
see
you
your
want to look
account
at,
number. No, 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 no. I want to see your account number and your banking information, please. Your routing
actually
number.
you
Oh, well,
you
that's
wouldn't
good.
see anything like like that, but you would see what I have invested in, and I'm not comfortable showing. But I think I own. I'm going to it right now. I think I own 90 Stellar.
Okay.
Yes, I own 90 Stellar, and this is something I'm totally cool with sharing. But I own 90 Stellar. Stellar right
Mm.
now is priced at 41 cents. I bought it when it was something like 2 cents or something like that.
Dang.
So I have $37.30 is the amount that I theoretically, if I sold it right now, theoretically I would get from it. I didn't spend $37 on this. I mean, what
Yeah.
is 90 divided by 0.02 is how much I put in there. So 90 divided by 0.02.
It's
No, did
it
that
should
wrong.
show you
Times, not
cost per
divided.
share on there, or not cost per share, but cost per coin.
I spent $2.
Yeah. Well,
I bought 90 of them for $2, and I now have $32. It went up 84 cents.
to let you guys know this, here's where I'm going to go with this, so you guys can understand this. It's going to depend on. I think one of those crypto coins is going to be, or three of them are going to be dominant. I think it's going to be
Yep.
ETH, BTC. I don't know the third one yet. I really don't. I can't really see. I think we're fighting for that. The reason I say that is how I want to put it in perspective. Windows, Apple. Who's the other person that's really competing right there? The other like operating system. The reason I say that, that's what I feel like it's going to do. Now I'm going to point out that Bitcoin, I almost bought it for 12 grand. I couldn't transfer the money in time to buy it. And I just said, you know what, forget it. I'm not going to buy it. It's going down. It dropped all the way down to 4,000 last year in March, guys. Now I would have lost all that money, or not all of it. I would be down like 4 grand, and I'd be like, man, I only have 4 grand and I spent 12. You know what I mean? And then
You want to know what it's worth now? I'm looking at it.
like 50K or 49.
$51,048. 49. It just went up.
So if I would have bought one, just one, but here's the thing though, I had no idea it would go up that much, and no one really did. I mean, you got people who believed in it, and that's great. And you do pay taxes on crypto gains. They do it as like property now. So if you have that,
Yep.
you're gonna pay unless you do like a long. I gotta find out what the long term and all that stuff is, but you are going to pay. Government's gonna get their money, man. Before, I think you could get away with it until recently. I wonder if they went back and got you, like, hey, you made a ton of money, give us that. But
So I can actually comment on that. Before it was hardware type wallets, and
mhm,
I guess I got to kind of explain that. So a wallet is kind of like your portfolio. It's what you own in, and those wallets consist of keys. And those
yep,
keys are transaction keys that basically they're so encrypted you're not going to ever. I mean, I could give someone my key, and if they knew nothing about cryptocurrency or nothing on what to do with it, they wouldn't be able to crack that key. But
yeah,
keys are used to make transactions. So when you back in the day when you held this stuff on physical hardware, nobody knew what you had.
yep,
Nobody can know. And you had to almost personally say, I want to sell this. Here is the key for the amount that I want to sell. I'm trading you 1 Bitcoin for 500 Ether, for example,
yeah,
and that's how you would do it. Now there are a bunch of trading sites out there, and those trading sites got hit hard by the IRS, and to the point where it's actually illegal to use any of the sites that are not based in the U.S. To give you an example, there was one called Binance, my absolute favorite. I think they're based in China. They got blocked last year or the year before or something like that. You
dang,
cannot trade on Binance anymore because they don't play with the rules of the IRS and the US government. So there's other sites that are Coinbase, for example, is one of them that's really big. That's a US company. Because they're a company and because they're dealings with this stuff and they're making money off of it. Every time I trade, I give Coinbase, for example, a cut. It's a
yep,
super tiny cut, but I give them a cut. So when I signed up for Coinbase, I had to give them my personal information so the government knows what I have. Now, the difference is I think it is kind of like regular stocks where I don't, and you can correct me if I'm wrong on this, with regular stocks. If I put $100 in, I don't owe taxes on anything unless I cash out on that.
yeah,
So if I have, $1 million in Bitcoin and I put $100 in, I don't pay taxes on that income unless I cash out because it's not income yet. It's
yep.
not. to the government, I have spent money and that's it.
Yep.
It is only until I sell that thing that the government wants to cut.
Yep.
Um, so it's a lot like when you sell a car, for example. Um, you buy a car for 2,000, you don't have to pay, or actually that's a bad example because when I sell a car, I don't pay the taxes on it.
Yep. The
The
other
person
person
buying it
has.
does.
Yeah.
But it's kind of like that, when the government just does not care unless you actually sell it and you actually get an income. They
To
only
a
care
certain
about your
point,
income,
yeah,
not what you
yeah,
put in.
like exactly. And the thing is, at the end of the day, the government just wants to kind of just get, if you made money basically from living in America, they want their cut, if that makes any to a
Yeah.
point.
Yeah.
But at the end of the day, I think crypto, you got to hope you invest in the right one. And that's where I will say it's risky in that regard. Now, you can take, like I said, little bets and just try to win. I don't think that's bad at all. Like with Dogecoin, before it got popular, I just had 1,000 into it. Once I made $400, I was like, I'll take my gain. Bye. Like, you know what I mean?
Yeah.
Like, I don't think it's going to go any
Because
higher.
it was a meme. There was
Yeah,
nothing behind
exactly.
it. People
Well,
were just
Elon got
jacking it
behind
up
it,
to
and I
have
was
fun.
like, you know what, Elon, I'm gonna ride your parade right now, and then I'm gonna leave. Which is what I
Yeah.
think he did. I think the same thing. Like right now, he bought all that Bitcoin. I'm positive they sold it. Like I'm positive they're not taking, or they're holding it, and they know when to sell it. It's just crazy.
There
Yeah,
there's these things called whales, and
yeah,
they're people that hold a ton of the asset.
yep,
So let's say there's 5 billion physical Bitcoin that can be owned right now, and this
mm.
changes. It gets halved, and like you were talking
Oh
about with
yeah,
stocks where they divvy it up, so it gets halved every so often and whatnot. But let's say there's 5 billion and somebody owns 2.5 billion. That's a gigantic well. So
yeah,
so that person is called a whale because they when they sell, the price goes way down. It drops hard
yeah.
when they sell. So and there's the other upside to that when I'm a little leery about celebrities or people like Elon tweeting out or saying like you should buy this stock. And I don't know
Well,
what your opinion is on this,
they're
but
sneaky about it. They never say that. They say we like this, or they'll put it. They've been putting it in their bio, Bitcoin, Bitcoin. And I
yeah,
am with you on that. Like it's off. I will say this: it's always buy on the rumor, sell on the news. If they're telling us now to buy, you need to be very
it's too late.
careful. Yeah, I don't want to say that,
That's
but
my
yeah,
if somebody tells you to buy a stock, don't do it. That's my rule of thumb.
yeah.
And I've been dealing with that with my girlfriend lately. Is she was like, well, people are saying to buy GameStop and to buy Dogecoin and she went and did it, and I was like, you didn't, because when you were told, I laid it out for her. I pulled up the graphs and everything. I was like, when were you told? Oh, you were told here. People are telling you to buy because they already own and they
Oh,
want that price jacked up so they can sell. So you're gonna buy it for, let's say, $20. You're gonna buy it for $20, and so are so many other people that don't know about this, and they're gonna buy it, and it's gonna jack that $20 to $40. Well, the people that bought it at $10 now just made a huge increase. So when it gets to a $40, for example, that's their hard cut. They're gonna sell, and it's gonna tank below what you paid for it, and you're gonna take a
exactly.
loss.
I
So
will say
when
this, which
somebody's
yeah, keep going.
I was just gonna say, when somebody comes to me and says, "I heard about this thing, you should buy it," I'm not doing anything until I do my research. And part of that research is okay, where is it now? Where was it 10 days ago, or a week or a month ago? If it's been steadily going up quite a bit of time before they told me to buy it, I'm not gonna buy it.
That's really
Now,
sound advice.
if it's something like a startup that they're like, hey, I heard about this new company, they're doing this insane thing, I'd be like, and they're like, you should buy their cryptocurrency. I'm like, okay, hold up. First on, what's the company called?
Yes.
What is this huge thing that you're doing? So
Mm,
I'm going to take all of that into account, and I'm still going to go look at their graphs. And let's say it starts at $1. I'm going to be
yeah.
like, okay, it's been $1 or around $1 for the last year, and it hasn't really gone up. I do like this thing that they're doing. I believe in this thing that they're doing. Okay, I'm going to put some money into this, and I'm going to hold it. I'm going to hold it, and I'm going to watch it. And if for the next year it kind of stays consistent, that's going to make me feel a little bit more comfortable. I'm going to continue holding. If it spikes super high, I'm going to try to look at why it spiked super high. Did some major company come in and buy the remaining Bitcoin that they have available? And if so, what is this company? Why did they do that? Are they investing in it, or are they trying to jack up the price to then turn around and sell, because that is, I don't know what the term is for that, but there are so many companies and people that do that in the stock market and in cryptocurrency, where every day they will sell one thing to buy another, jack up the price, get other people to buy that, and then 2 days later sell that and go to the next one and the next one. They're not making a ton of money every time they sell, but they're making enough to where every week they have revenue that they're making.
Exactly.
That's scary to somebody like me that wants to invest in things that I believe in and use it as something like a retirement fund in the future, or a college fund for my daughter or something like that. That's too high risk for me.
Yeah. At the end of the day, when it comes to GME, it's a totally different topic. Dogecoin, we both agree on. GME is people or hedge funds were shorting it, and I don't think they're
Yeah,
worth whatever they're at. But that's kind of the same thing with Tesla. Like Tesla was getting shorted all the time. Like the stock wasn't going down. These hedge funds were kind of pushing it down. And at the end of the day, that's a different topic with GME. But is GME a long term one? Like I would buy, like I have 40 shares of Microsoft. I wouldn't buy 40 shares of GME. I might buy five and see what happens. But even then, no, I agree with you. It's not something, if you guys, it's not solid financial investing. It's more risk taking where with, crypto, like if
it's
something stays
gambling.
yeah, it is. When you pick crypto and it's like $1 and you've noticed it's been $1 for a while and the people are talking about it, that's kind of a good little thing to look at because it's not volatile. People aren't buying and selling. People aren't pumping it. But at the end of the day, um, you got to be okay with doing your research, and it's not hard. Like looking at those financial charts, it's not that confusing. You saw how the earnings for Tesla was. You saw how the earnings were for Microsoft. It's looking at that and being like, are they going to make enough money, or am I paying for the future? That's what a lot of people are saying right now for Tesla. We're paying right now what it's going to be worth 5 years from now because it's gone up like that because you're investing in their future, which I believe in, and I know you believe in it to a point too as well. But at the
Yeah.
end of the day, you're completely right. You're going to be gambling if you're just going to do what people tell you to buy. Now, I know a lot of you are going to say,
So
"Well, you just told us to buy this." It's different. I promise you, the ETFs, the mutual funds I'm talking about, is completely different than buying GME because you want to get back at a hedge fund.
yeah, us telling you to go buy Microsoft isn't going to pump up Microsoft. It
Yeah.
literally is not going to. It's not even going to move. If anything, it might go down just a little bit. But the us telling you to go buy Bitcoin, for example, that's different. Or go
Yeah.
buy Stellar, or go buy some stock in some company like GameStop is a great example. If we were going to say, hey, all of you need to buy GameStop right now, we're not telling you to buy GameStop because GameStop's just came out with this new innovative thing that nobody's
Yeah.
ever thought of, and they're going to be worth a ton of money. We're telling you to buy GameStop because we have a stake in GameStop and we want you to jack up the price
Bingo.
for us so we can then sell it and leave you in the dust.
Yep. And
So
it's going to
that's why
happen.
if I'm going to give anybody financial advice, I'm going to tell them that do not do not buy things because other people tell you to buy them. Buy them because you believe in it, you've done your research, and you feel comfortable in it.
And
Now,
everything we said here is
I
not financial advice. Like we are just
nothing.
telling
Yeah,
you what we like, what we love, what's worked for us, just so we don't get
yep,
sued here. Because I ain't dealing with that
yes.
BS.
I'm not telling you guys to do anything. This is all not just our sharing our knowledge.
Yep.
So I'm going to tell you this, that I actually am watching GameStop, but not necessarily their stock. I'm watching GameStop as a company and seeing what they're doing with this. Because one thing that the Reddit community did do is kind of breathe a little bit of life into GameStop as a company.
Mhm.
If you can imagine owning game, or you can imagine being a major shareholders in GameStop, and you're seeing everything that's happening, especially with COVID and making things super, super hard for people to go into stores. Consoles are coming out without CD drives or any type of physical media that you go and buy and you put in there anymore. Nintendo Switch, you can buy every single Nintendo Switch game digitally on the Nintendo store.
Yep.
You don't have to go to GameStop to buy one. And people are like, "Well, I would really love to own that game, just in physical form." And that's great. And you're supporting what you believe in. But me personally, there were some games that I did buy physically, mainly because I wanted the case, to be honest.
I only do it because
But then there
I
were
it was cheaper. That's the only time I'll buy or the actual thing is because it's cheaper. But if the digital is
So
cheaper,
yeah,
you know,
if you're okay with buying a game used, absolutely, I would go to GameStop and I would buy that game used. But if it's something like Pokemon, for example, like Pokemon Sword and Shield, I went into GameStop and I physically bought Pokemon Sword and Shield because I wanted the Pokemon box that the little cartridge came in. That's it.
yeah,
I hated the fact that I had to switch carts every time I wanted to play a game. So other games that I didn't really want that novelty type thing with, I just bought from the store because if I was going to buy it new, it actually was around the same price.
yeah.
Used is different though. You can't really buy a used game
Oh,
digitally.
totally.
You would have to go into a store for it. But going back to my original point, GameStop was like, man, we're just struggling here because people are now able to just buy their games online. They go buy their consoles. They don't even have to come to us to buy their consoles. They can go get them from Amazon or Best Buy, and they could just and they could actually you could buy a console from GameStop online and they'll ship it to you too.
Yeah.
But Amazon, being Amazon, for example, is just killing all of these retail stores
Yep.
because all the companies are just selling their stuff directly on Amazon. You can get it in your door 2 days later. So GameStop, what I'm watching for is like, okay, they thought they were going down. Reddit said, screw you, hedge fund people that are forcing them to go down. We're
Yes.
not allowing it. We're
Yep.
going to invest in GameStop. Now, GameStop has another breath of life. And if those investors do what I hope they're going to do, they're going to go, okay, we're not dead yet. We have a little bit of time. Let's think about this. What can we do to re-innovate ourselves? If they all agree that the storefront not working, not
Hmm.
happening, we need to we need to re-innovate ourselves and figure out something else to where we can again be a big player like we were. That's what I'm watching for. If that comes out that they're going to start doing something like that, that's when I'm going to put money in.
Well, right now, you see the new article that came out like probably a couple hours ago, like before we got on here. That
I have not, no.
basically, okay. So basically, Chewy Incorporated, the tapped into Chewy Incorporated founder and activist investor Ryan Cohen, who has helmed the e-commerce business shift. So they're trying to do that shift. They're trying to change it to where, okay, we can compete with our competitor, and we're trying to change the way we are. Like it, and it could happen. And I'll be honest with you, that's Roaring Kitty who kind of believed in GameStop, if I'm being honest with you, which is his name's on his name is something else on there, but I don't want to say it on Reddit. But he literally was just like, I see what they're doing here, and if enough of us do this, they can't beat us. And that's why he went to court. It wasn't because he did anything illegal. It's just because he literally did what they normally do reverse. Like a lot of people want to do put options, which is extremely risky, and that's why those hedge funds can do it because they have enough money to where they can get away with that. Like they can bet against a company like GameStop, which they had done for years. They've done it with Tesla. They even done it with Apple. Apple, like last year
Yep.
before GME, Apple and Tesla. Tesla was the number one, and then Apple was shorted. Like people were betting against these companies who fail, and when they do that, it hurts the stock. And it's not exactly like the stock is worth this or worth that. They're pushing it down. And it was just so crazy to watch that thing go from $5 or $20 all the way to 400. I think it reached 500 at one point.
Yeah, yeah,
It was unreal.
and the great thing about it is when it went up, the big I'm going to go back to that term whales
Hmm.
didn't sell
Yeah.
because those people believe in GameStop and they believe that GameStop is not going to just be like, okay, great, we're just going to keep doing what we're doing. They believe that they're actually going to go, okay, we got this. We're going to reinvent. We're going to change ourselves so we can compete with our direct competitors, which are not other game stores, I mean, at all. Their competitors are online or the e-commerce, like you said, like Amazon, Best Buy, Walmart, Target, all these places that for years you've been able to buy the stuff online and have it shipped directly to your door. That's what they need to compete with. And I honestly have no clue how they're going to do it. Um, but I'm interested in when they actually come out and with a plan and say this is what we're gonna do, or even before they come out with a plan, if they never come out with something and they just start doing it, and I look at it and I go, awesome, that's when I'm gonna invest because that $400 might go up to 600, 700, or 900.
I
It just
think
depends.
Yeah, I think what they're gonna do is they're gonna figure out a way to get on the console. That's what they got to do. They got to figure out a way to compete like that, where like, here's the code. This code gives you the ability to download this game. We have a cheaper price, or they have a better Game Pass, something like that. Like they're
So
gonna have to compete like that.
so
Go
you
ahead.
know what Steam is for the
Yeah,
PC. There isn't anything like that for consoles that are across all consoles.
yeah,
Now I doubt this is what they're gonna do, but this is what if they did do this, this would get me insanely excited, and this would get me to buy them. Is if they came out with a Steam-like um, game store that is on Xbox, Nintendo, and PlayStation, and that game store sells exclusive games to Xbox and PlayStation, and also sells cross-platform games. For example, I know it's free, but I know it's on practically every console. Is Fortnite.
yeah.
Let's say Fortnite wasn't free. Let's say it was $20. That one store would be the default store on every console, and it would have Fortnite on every single one of the consoles, and it would have Halo only on Xbox, and it would have I can't think of a specific one for PlayStation, but there are specific ones, like let's say Final Fantasy, I think is a PlayStation exclusive or something like that.
Yeah.
The problem with that is that I see is Microsoft kind of has their own game store, PlayStation kind of has their own game store, and Nintendo has their own game store. They all have their own game stores. So um, GameStop would have to do something or come up with something that would incite those companies to say, okay, let's scratch this game store that is actually costing us resources and money and all this other, and let GameStop do it. If GameStop can do something like that, they would jump to the powerhouse of gaming almost instantly.
You want to know what I think they're gonna have to do two ways. They're gonna have to pay to be on all those consoles. That costs
Yeah.
money to be on those consoles. I don't think those companies would agree to that because they're gonna be like, "You're taking revenue from us, man, a lot." I think this is just, we'll do this speculation where they'll record me later and I'll be like, "I told you guys this. You heard it from me." Could be totally wrong. They're gonna make a console that lets you crossplay. That's what I think they're gonna do, and they're gonna make it to where that console is the e-commerce thing that they need, or they have to figure out something that lets them adapt to that particular thing. Because at the end of the day, why would Microsoft let them put that app on there? You know what I mean? Unless they paid a ton of money to become their Game Pass for each one, and I just feel like they don't want to do that because then PS4 is going to be like, or PlayStation is going to be like, you can't play God of War on Xbox. That's our stuff. No, but unless CME takes that hit for them and makes them do it, I feel like they got to come out with something to connect to that console, or they got to figure out something. Because I thought Google gaming was going to take off simply because they were kind of smart about it. You can play any game you want, and it failed miserably because they didn't do what we thought they were going to do. You want to be able to play all these games, and basically we need, like you said, Steam needs to be able to. Steam should do it, maybe, like, get back and steal all of them. Yeah, they already tried that. Sony and Microsoft shut it down, I'm pretty sure. Yeah. So what we have to do is we have to make something that lets you have access to those, almost like a server, if that makes any sense. You know what I mean? Like, to where you can
Cloud
actually,
gaming
yeah,
Cloud gaming is something I was going to bring up. Another thing that I would be hesitant in, but I
yeah,
would be excited about if they did it right.
yeah,
Stadia, Google Stadia was a
hmm,
cloud game. That's the latest one that's came out, and it's already flopped. And
yeah,
the reason why a lot of these have flopped is a lot of the game publishers don't want to play nice. They don't. They don't. They don't want or they're scared of the ability that somebody can get in there and just play any game for a subscription fee or something like that.
yep,
But here's something that I would be like a little girl, giddy as all hell,
yeah,
is if I could never have to spend $2,000 on a computer ever again, if I could rent a gaming PC in the cloud and simply connect to it, and the latency is good and the compatibility is good, but I can simply own that virtual gaming machine, and that is mine. And all I have is a hub at home that has access to internet and very small processing power to send the traffic back and forth, send my camera back and forth, send my microphone back and forth, keyboard and mouse and monitor and all of that, but I rent for a monthly subscription a gaming PC, I would absolutely do that because guess what? If I wanted to take a, let's say I come to visit you for a
Yeah.
week, you're on the other side of the country. I am not going to haul my gaming PC that is fucking gigantic. And I mean,
Yep.
like, it weighs nearly 100 pounds, and it's so big that I can barely carry it myself. It's awkward to carry. On top of that, I have my monitor, bare
Yep.
minimum, need one monitor, my keyboard, my mouse, my microphone, my speakers or a headset, and my camera if I was going to do anything that I do here and I was going to do it there for a week. Now, if I rented a gaming PC that gave me all of the same capabilities that I have now that I could just connect to over the internet via a little device like a hub that we already use today, Fire Sticks,
Yep.
Apple TV, those are all little streaming devices that have very small processing power, but you just access everything in the cloud. If I could do that, all I would have to do is literally bring that and use a TV or use a monitor or something like that. And I'm not having to carry this gigantic gaming PC. So if GameStop does something like that, oh my God, I would be insane. It would be insane. And it wouldn't change the way you buy games. I would still buy my games on Steam. I would still buy all my software. I would still do everything I'm doing the same. It's that gaming PC that I don't have to pay for anymore, that I don't have to buy. And on top of that, I don't have to spend the power it takes to power this thing all day. I don't have to spend the space in my office or anything like that. The mobility aspect that I just talked about is insane. The cost of that little device is going to be super cheap.
Yep.
I can even imagine using your cell phone
I
because you can already
100%.
connect your cell phone to a TV or a monitor. You can already connect a mouse and keyboard to your cell phone, but all I would need is an app that I connect and boom, Windows pops up on my TV. And I have full-fledged Windows. I have access to everything. Everything's mine. I just pay a monthly subscription. We are so close to that already because you can rent servers that are kind of like that, where I
Mhm.
can rent a server that either is virtual, meaning that I get allocated up to a certain amount of resources.
Yep.
Where those resources come from is who knows? I don't care. Or I can even pay a little bit extra more, and I say I want a physical processor to myself, and I want this much physical RAM to myself and physical storage. Now I own technically on a subscription a piece of hardware somewhere in a data center.
The thing is, it's like that's what I think they're going to have to do because that's the only thing that hasn't been explored. And if they have that, you bring up I can buy any game, they can make it to where, oh, you want to play God of War, you got to pay Sony still, but we take a little percentage of that. But guess what? You get to play on all the console, and that's where I think they'll have to hit hard with that and be ready for the consoles to be like, oh, wait a minute, we're all cross-platform. You know what I mean? Because I see them. That's the only way those other companies would be able to make their money back. Because why would I buy a console now? When I buy this little thing that gives me access, my name is Lostdrifters, and I can play infinite amount of games anywhere, depending on your internet. So as long as your internet was strong enough and good, the latency wouldn't be so bad. But other than that, like it would be genius. And guess what? I don't like if I didn't have a PC. Oh, you're on that. I can just easily switch over and play it on the game for you on, excuse me, on there, just like I do now. Like I have Overwatch on my PC and Overwatch on Xbox, and it would
Yeah.
be seamless. Like they have to do that. That has to be their future. Otherwise,
Can you imagine not having to spend the money you just spent on that laptop?
yeah, that'd be nice. 2 grand, give me it back.
Yeah, you could have rented a gaming PC for $10 a month.
Yeah, I think it will be. Let's see. I think buying that thing will be like it will become close to a console price. It'll be up there, and then the service would be like you said. How much is it for Game Pass? Like $15 a month, I think.
Something like that, yeah.
Yeah. So imagine them just making it a little higher because they're offering more. Technically, you can be on PlayStation and stuff like that, but it would be great. Honestly, it'd make my job as a streamer right now a lot easier. I wouldn't have to carry everything, hook up to the internet, hook up to their TV, and just have my controllers or my keyboard. Right now, when I go to pack up stuff, I have to, like you said, I have to close my laptop, bring my webcam, bring my microphone, bring the Elgato, bring the Xbox, bring my controller, bring my headset, and then bring the power thing that powers or the power stuff for an outlet. Like you got to bring a multiple outlet because most of the time when you go to set all this up, they don't have more than like two outlets. Like there's a lot of stuff, and it becomes one thing in a controller. Eat
Yep.
me up, man. Like why? Who do we need to invest in to get this done? And that's where I go back to if those hedge funds keep doing what they're doing and keep trying to double down and short on GM, they're going to keep giving those people at GME more and more money. So they're going to sell little bits, just like Tesla sold a little bit of their own shares when they did the split. Or if GME does a split, and they'll sell some of that stuff and capitalize. That would be exactly what they need to do to win. And I think going to the e-commerce idea is kind of close there. But we'll see. Someone's going to do it. Someone's going to finally do it. You just got to hope that those other companies play game. That's the only problem.
I wish I had the I don't know the word for it, but I wish I had the ability to do it myself, because you don't have to go all ham and start in with and getting all those companies in. I think the smart thing to do would be to start off the renting the gaming PC thing. You get
Yep.
that thing down, you get that thing working good to where it's got good compatibility with all people's different hardware, monitors and keyboards and mouse and phones. You get it working on iPads, you get it working on Android tablets and cell
Mhm.
phones, and all of that stuff. And then that instantly opens up the possibility of, well, I can play PC games without having a gaming computer. And then now you get on top of like, hey Sony, check out this thing that I've been doing. I've been doing this for 2 years. It's been increasing steadily. Do you want in on this? I
Yep.
want to be able to I want to be able to offer a virtual PS5. I want to be able to do that. Maybe your next console is not physical. Let's talk about it.
Ooh, that's a good
Maybe
line right there, man.
maybe PS6 is virtual, and I want to be in on that. I want to be able to provide that for you.
I can only
And
get
then you
so
go to
happy over here,
Microsoft and
man.
be like, "Hey, PlayStation's already in. What are you gonna do?"
Dude, I would be
you know,
so hyped if that
I
was to
wish I could
happen.
do it. I
Mm,
wish I could do it, because I feel like
mm,
we talked about this a little bit with the Elon or the Tesla talk,
hmm.
the Neuralink and the potential of Neuralink being a computer inside of your brain. Imagine 20 years from now, you don't have to own a PC anymore, or a laptop, or a cell phone, or a TV, or
Yeah.
any of that. It's all in your head, and you want to access something, you access it. You want to play a game, you play a game, and it's all virtual, it's all in your head, and it starts with getting rid of this physical hardware.
It does. And then also you got to see how much of these companies they're going to have a ton of room. You know, how many consoles? Might be 2 million consoles. I'm sure they would find it. That's probably where they're going to do. They're going to move to Arizona, pick up all that land out there, and everything. Like, but I see it happening. I really do because somebody. It's always something innovative to where okay, the next latest and greatest technology, and I can see those. You know what's funny? I could see Xbox being like, you know what, PlayStation? How about we team up together and do this? How about we make our next console our individual thing? But I can play on your games. You can like it's so many ways they could go for it, but it's going to be interesting to see how gaming. Because that's the only thing that I could see that would be next. We talked about that too. The next gaming thing is either augmented reality or just getting better. If that makes any sense, like easier to move around stuff and everything like that. But
So one more point, think about work. People that develop or do data entry
yeah,
or manage their own websites and stuff like that.
hmm,
Imagine a call center. All the call centers used to have individual computers at everyone's desk. That's an extreme amount of cost. Even if it's a low cost computer, you have 400 people in one building and you have 200 buildings across the US. That's a ton of money you're spending on physical hardware. So what call centers recently started doing is they would spend the money on servers and
yeah,
data centers, and they would give everybody a virtual machine.
yep, that's
So
exactly,
it's kind of the same thing. Now they don't have that company doesn't have to spend the cost of buying physical hardware for every person. They all now only have to buy a keyboard, mouse, a monitor, and a headset. And then they have this little box that they connect to, and that
mhm,
box, all it does is handle the transmission from the peripherals to the server and back, and that's it. And when an employee leaves, wipe that virtual machine, delete it, create a new one instantly for a new employee with their name, their email, that all their stuff is just instantly created. That technology has been around, and companies have been doing it on their own to save money. So imagine if this gaming PC renting company, virtual gaming machine company, there's no reason why they can't do virtual workstations. There's no reason why they can't do virtual data mining or data storage or any of that stuff. I don't know if GameStop's going to do something like this. I think it would be a little far fetched or out of their norm or
Mm,
realm to do something that vast.
of
But
course.
all these companies that rent gaming servers or just servers into Amazon or Amazon Web Services, for example, you can rent a server, a Linux server, a Windows server, or whatever type of server from them. Why can't they have hardware that you can rent a physical workstation? You know,
I think I'll be honest with you. I know you're
pay a
like you're
monthly subscription.
yeah, totally. But I feel like I don't see another way for GameStop to thrive than to do what we talked about. If we're going to talk about GameStop like that, that's the only reason why I suggest that, simply because there's only so much you can really do and really go from there, because
Yep.
like you said, everyone's going digitally because that's kind of easier. I don't have to drive. I don't have to go anywhere. I don't have to talk to my mom. If I have money, I put it on the card, or I put it on like the gift card so I can get the game I want. And I don't have to go haggle with GameStop, which is the one thing I hate the most. It's like, oh, it's $2, and it's like, no. But see how that goes. Well, this has been a long
Yep.
one. We've been on here for 2 hours, from talking with stocks and going to technology. And I think we need to wrap it up a little bit here so we can upload it for tomorrow. But I really appreciate all you guys hanging in here with us. We'll definitely try to keep doing this consistently. You can find these on YouTube. You can find these on Anchor that I have as well. And have you made a link tree yet?
I have not made a link tree yet, but I need to.
You need to make one, and then we're going to put your Coinbase referral on there because you brought that up today. So you can get free slices of Bitcoin. Now, we talk about this all the time, but like if you guys want to use Coinbase, use our referral links. That's really nice. We appreciate it. You don't have to. You can make one on your own and not give it to us at all. Or you can go to Webull. It's all free in terms of like you're getting that free stock back in that slice just for signing up. You have to buy a certain amount of cryptocurrency. I think it's $100 worth. And the same thing with Webull. You just have to deposit $100, but get the free part of it and then do what you want with it after that. But
Yep.
I really this is a good talk. We should probably do
Yeah.
maybe once a week some kind of stock talk, because
Yeah.
you knew a little
I
bit
agree.
more than I thought you did. If I'm being honest with you, you were sneaky on that one. Like you knew a lot
I
of.
I knew I knew what I knew, but I didn't know if what I knew was correct.
That is a tongue twister. I knew what I knew, but I didn't know if I
Yeah.
knew. Oh my god.
But for one thing I want to say is, let's take suggestions for talks. I mean, we're doing
Yeah.
these practically every day. If you guys want to join the Lost Drifters Discord, or even put it in the comments or something like that, or maybe we'll set up a poll, for the talks throughout the week. You guys can decide what we talk about. If it's something that we can talk about, we'll talk about it.
Yeah, totally. Or if you guys know somebody who would be cool to bring on the interview, I love to interview people. I know he does too. Like we can literally be like, okay, you did this and then you doing this. What did you think about that? And it's just
Yep.
like we could totally do that too. Now that we got this down pretty well, and it turned out pretty well, I think, for everybody. That being said, I'm gonna say goodbye to you guys. We'll catch you on the other side. If you were here and you subscribe, you're gonna see your name and everything roll in the credits. And definitely say goodbye to Meat and Beans until we come back on.
Yeah. Thank you everybody for watching. We'll see you next time.